Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders and their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing and rejecting to the upside a quite strong historical monthly support and demand area. In multiple occasions, in fact, the market has already tested this zone and rejected it to the upside quite aggressively. And what we can see is that just a couple months ago, the market tested again the exact same zone, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this level. So the monthly time frame does seem quite bullish, and more bullish continuation away from this level could be expected. We can also notice that from a pattern standpoint, if we look at the most recent price action, we have a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements lining up exactly with that horizontal historical support and demand that we have just identified. In fact, if we extend this to the left, is the same area, is inside of the same zone. And this creates a confluence of support because we have multiple layers of support inside of the same area of price. And this increases the probabilities that we could see institutional longing inside of that area. And we will be speaking about institutional longing later on when we move to the analysis to the commitment of traders. For now, let's drop that on the weekly time frame and see what we have. Now, from a weekly standpoint, we see a very similar thing when it comes to the pattern that the market has been creating. In fact, we can notice how clearly we have previous weekly resistance here from which this red candle and rejection to the downside was created, which the market then broke to the upside. And what we know is that previous resistance, once it is broken to the upside, it is turned support. And that is one of the most basic rules of the market. And in fact, the market is currently testing this previous weekly resistance turned support and has already started rejecting it to the upside. And also here we can notice confluence of support because since we have an impulse and correction, also here if we want to measure that correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 50%, 0.618 and 0.786 Fibonacci retracements lining up with this previous resistance turn support, therefore again creating confluence of support inside of this area, inside of which we could see some institutional longing. So before we go in more detail into what we have here from a technical perspective on GBPUSD, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players, so institutions in the market are doing. How are they shifting their orders? Are they actually adding longs inside of these confluence of support areas that we have just identified? Well, if we go and see what we have when it comes to the GBP, and keep in mind that if we're looking at the GBP, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. What we can see here is that with the last reports, we have seen a massive increase of the net positions. We went from having minus 28.9k net positions, so a negative net positioning, meaning that we had more shorts than longs on the institutional side of the market with 72.6k shorts compared to only 43.6k longs, all the way up to now having a positive net positioning, so the complete opposite with more longs than shorts, 105.9k longs compared to only 58.2k shorts. So institutions have been getting very bullish on GBPUSD. So in a situation like this, we have to keep that in mind and move back to the chart. Institutions at the moment are moving to the bullish side of GBPUSD. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, as we were saying, in a situation like this, we have to identify the structure. And the structure, first of all, starts from here, because when the market from here was starting this move to the upside, it created this M pattern. And in fact, I did speak about GBPUSD just a few days ago when the market was around this area, and I explained all the reasons for which we could expect this push higher and completion of the M pattern at the neckline, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Then the market entered into a bearish structure from a daily standpoint, creating lower lows and lower highs. Now, that is the definition of a downtrend, right? When you have a downtrend, you expect the market to create lower lows and lower highs. And the break and shift from a bearish trend back to a bullish trend happens when the previous high gets breached to the upside. Now, in this case, the previous high is exactly here. So, simply put, until the market will remain below this previous high, it is still in a bearish structure from a daily standpoint, therefore it can easily continue lower. However, if we get a break above this previous resistance, at that point, this previous resistance would become support. And after the break on the retest of the previous resistance turns support, that is where we have good probabilities of getting more potential bullish continuation. Because after the break and retest, so when we have a bullish structure also from a daily standpoint, there is an increased probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential push higher away from this level. So if we get a break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.